We often imagine control as force. Historically, power asserted itself physically. It looked like soldiers on a street, locked doors, guarded borders, and mountains of bureaucratic paperwork. But modern control does not always arrive in a uniform. It can arrive as a service. It is built into systems we willingly adopt because they are faster, safer, and more convenient. Today, the architecture of power is shifting from physical barriers to digital protocols. Instead of a guard checking a physical passport, it is a frictionless biometric scan. Instead of a manual background check, it is an automated risk score, an algorithmic filter, and a digital payment rail. Most of these systems are not inherently sinister. They are designed to solve real, complex problems at scale. They streamline global supply chains, protect financial networks, and optimize modern cities. But this introduces a profound shift in how power operates. When everyday life, from buying groceries to crossing a border to accessing information, increasingly involves passing through digital checkpoints, the nature of authority changes. Once access to everyday life increasingly depends on these systems, whoever designs, regulates, or owns the platform gains power over the gate. Which leaves us with a critical question. If power is moving away from people giving orders and toward systems granting permission, how would we even recognize control when it arrives? Before a system can grant or deny access, it must first answer one fundamental question: who are you? Identity is one of the foundational gateways of modern life. Passports, driver's licenses, bank logins, phone verification, biometric scans, and digital wallets form a foundational layer of modern access systems. The push to digitize this layer solves real systemic problems. According to the World Bank's ID4D program, identification systems provide proof of legal identity that is often required for, or simplifies, access to rights, services, opportunities, and protections. These systems can reduce fraud, streamline welfare delivery, and support modern banking. We see this taking shape globally. The EU Digital Identity Wallet is designed to let citizens, residents, and businesses prove who they are and store, share, and digitally sign documents with the stated aim of safe, reliable, and private identification. The architecture behind this is supported by technical standards, guidelines, and regulatory frameworks. Organizations like NIST publish strict digital identity guidelines covering identity proofing, authentication, and federation to support security and privacy. But attention remains. A digital ID can make life significantly easier, but it can also become a universal checkpoint. When identity becomes a central key for banking, travel, health records, government services, online platforms, and payments, that identity infrastructure inherently becomes gatekeeping infrastructure. The danger is not identity itself. The danger is when identity becomes the switch that turns access on or off. When one digital credential can unlock everyday life, who decides what happens when it fails, expires, or is revoked? Once a system knows who you are, the next question is whether you are allowed to transact. We experience this every day. You tap a phone, you scan a card, you buy groceries, pay rent, cross a toll road, or subscribe online. The process is frictionless and instant, until it is not. The shift toward more digital payments solves real systemic problems. Digital rails provide speed, convenience, and scale. They expand financial access, reduce physical fraud, support anti-money laundering controls, and build national payment resilience. Central banks are already exploring the next phase. The Reserve Bank of Australia says it is actively researching CBDC, and that in theory, CBDC would be a new digital form of money issued by the Reserve Bank. The European Central Bank says the digital euro would complement cash, be available for electronic payments, and would be secure and private. It also says the ECB and Euro system would not be able to identify who you are or what you are buying from the payment data they receive. But as money transitions into more digital infrastructure, new tensions emerge. The primary concern is not a sudden master plan to control individual spending. The concern is the shift toward a payment infrastructure that can become programmable, permissioned, or rule-based. As payments become more digital, completing a transaction requires more than just having funds. It depends on identity verification, active bank accounts, platform rules, fraud algorithms, compliance filters, and corporate payment processors. Cash lets a transaction happen directly between people. Digital payments often require a system to approve the transaction. The danger is not digital money itself. The danger is when payment becomes another checkpoint. When more of everyday life must pass through digital payment rails, who controls the rail? Once systems know who you are and how you transact, the next layer is prediction. We are already familiar with the basics: credit scores, fraud metrics, insurance risk, platform trust ratings, border risk assessments, recruitment filters, and welfare eligibility checks are increasingly embedded into modern systems. These scoring systems solve real, complex problems. They detect fraud, enable rapid loan assessment, triage public services, manage border security, streamline workplace recruitment, and improve platform safety. Regulators recognize the serious power of these mechanisms. The EU AI Act, for example, establishes a strict risk-based framework. It prohibits certain unacceptable risk AI practices, including some forms of social scoring, and classifies other AI systems as high risk when used in sensitive areas like education, employment, essential services, credit scoring, law enforcement, migration, and democratic processes. But attention remains. A score is not just information. A score can become a decision gate. The concern is not a single, unified, global social credit system. It is the growing spread of automated assessments across separate, everyday systems. If an algorithm classifies you as risky, ineligible, suspicious, low priority, or non-compliant, you may never know exactly why or how to effectively challenge it. The danger is not that every score is wrong. The danger is when a score becomes authority. When systems begin ranking people before humans even review them, who gets to challenge the ranking? Control systems become harder to see when they are built into the environment itself. We see this in the promise of the smart city. Traffic lights adjust automatically. Energy grids balance demand in real time. Emergency services respond faster. Sensors can detect congestion, pollution, leaks, and power outages. These systems are designed to improve safety, efficiency, sustainability, and quality of life. NIST notes that smart cities use connected devices and cyber-physical systems across sectors like transportation and energy to improve services and promote economic growth. UN Habitat, for example, advocates for people-centered smart cities, stressing the ethical, inclusive, and sustainable use of digital technologies to ensure no one is left behind. But a fundamental tension remains. When a city becomes measurable in real time, it can also become manageable in real time. The same infrastructure that optimizes a city creates a kind of nervous system of data: cameras, sensors, travel patterns, access systems, utilities, and public service platforms. When urban infrastructure becomes digital, some governance decisions can be shaped by technical settings: automated thresholds, permissions, access rules, alerts, and priority scores. The danger is not the sensor. The danger is when the sensor becomes part of a system that can watch, predict, and intervene. When the city itself becomes a data system, who controls what the system is allowed to see and what it is allowed to do? Control does not only come from blocking movement or money. It can come from shaping what people are likely to see, able to share, and encouraged to believe. When you scroll through a feed, read news, watch videos, or search for information, the experience feels open and personal. But every feed is sorted. Platforms need rules. Illegal content, scams, child exploitation, terrorist material, harassment, and coordinated manipulation are real, systemic threats. Regulation is often justified in large part to reduce these very real harms. The European Union's Digital Services Act, for instance, requires very large online platforms and search engines to be transparent about advertising, recommender systems, and content moderation decisions. It also requires them to assess and mitigate systemic risks, including risks to fundamental rights, civic discourse, electoral processes, public security, and the protection of minors. But a fundamental tension remains. The exact same systems built to protect users also hold the power to decide what gets amplified, buried, restricted, labeled, demonetized, or removed entirely. This is not only a question of government censorship, it is about a structural shift where private, algorithmic infrastructure has become the primary arena for public debate. The danger is not that every rule is censorship. The danger is when visibility itself becomes governed by systems most people cannot see. If public conversation now depends on private platforms, who controls the architecture of attention? We have looked at identity, payments, scoring, infrastructure, and information as separate layers. But these systems become more consequential when they connect. A single system can monitor. A connected system can govern access. On the surface, an identity wallet, a payment app, a transport card, and a social platform appear to be separate tools. But underneath, they can be linked by APIs, data exchanges, platform permissions, and automated compliance checks. This integration solves real systemic problems. It delivers everyday convenience, reduces fraud, speeds up public services, and supports emergency response and national security. But as these systems become interoperable, a new tension emerges. The more systems connect, the more a decision in one layer can affect access in another. A failed identity check can block a payment. A fraud score can freeze an account. A platform rule can remove visibility. A risk flag can trigger extra screening. A city system can prioritize services or route access. Modern control can move through settings, not orders. It operates through permissions, eligibility rules, risk thresholds, automated denials, and compliance flags. The danger is not one central database. The danger is a chain of systems that can act like one. When every gate is connected to another gate, who controls the system of gates? We often picture control as a cartoon. We imagine a single dictator, a secret committee, or a hidden control room. But technocratic control does not need a villain. Modern power is increasingly faceless, automated, distributed, and difficult to challenge. It emerges quietly when everyday systems connect. Identity becomes the access layer. Payments act as the transaction layer. Scoring serves as the eligibility layer. Smart infrastructure shapes the environment, and private platforms increasingly shape our attention. Each of these systems was designed to solve a real problem. But when they are combined, they create deep structural dependence. The danger is not technology itself. The danger is when technology becomes the gatekeeper of ordinary life. Control no longer has to shout. It can simply deny access. If the system can decide who can enter, pay, speak, move, or be seen, who controls the system? And as always, stay curious.